Hi folks, Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
Kate, welcome to the show.
Thanks for having me.
So, Kate, let's start off with a little bit of your background. So, how did you get into the regenerative finance, transforming the economy, social justice space? What were you kind of doing before then, in the years after that?
Yeah, so I think that I first got interested in this space when I was studying abroad and I lived in Thailand on an anti-capitalist commune that was run by these Buddhists who were kind of inverting. So in Thailand, like a lot of the Buddhism is very connected to material capitalist culture. And so they were inverting the whole like Buddhism is associated with wealth. And instead they were putting forward this idea that profit and generating profit from businesses was generating negative karma. And that inversely, if you lost money, you were gaining positive karma. So they would run these kind of parody fairs that were making fun of capitalism, and they had this kind of alternative economy. And so it really shook up. I was interested in mindfulness and in Buddhist economics, and it really shook up my ideas about how to challenge maybe dominant economic ideas in a playful, creative, kind of spiritually grounded way. And that was about 10 years ago. And from there, I got interested in E.F. Schumacher and local economics and Buddhist economics, and then eventually connected that back to my own family and my own family's accumulation of wealth and my own money, and I became an impact investor.
That's fascinating. So some of the Buddhists, I also do some meditation, and I think a lot of the strains out here, at least in the West Coast, come from Thailand, like the Thai forest monk tradition, like Jack Cornfield. And is that similar to where you were in Thailand, or was this a different strain, do you think?
It was a different strain, but it came out of similar traditions, linked traditions. The group I stayed with was the Santia Soap group, which was started by a kind of like a prophet leader named Phra Bodhirak, who was rebelling against kind of like the, monks on TV or monks in limos, monks wearing gold chains kind of thing, and took it back to a very, like a simple lifestyle and more, and he was interested in getting back to like the roots of simplicity and right livelihood. And so he created several monastic communities that were both for monks and for lay people. So there were 9 different communes in Thailand that follow his approach. So, yeah.
Cool. And what is Buddhist economics, just for folks who are interested?
Yeah, I mean, there's a lot of different understandings of Buddhist economics. So, like, E.F. Schumacher has an essay on Buddhist economics that outlines his own understandings of it. And I think there's several Thai scholars who talk about Buddhist economics. Um, and basically, I mean, like, I'm sure every Buddhist has like a different understanding of what Buddhist economics is, but common themes include thinking about right livelihood, thinking about applying like non-attachment to your approach to economic activities in the economy, and looking at ways that your spirituality can be embodied in, your work, your investments, the way you spend money, the way you move through the economy, those kinds of things.
And so you came back, you talked to some thought leaders, looks like Michael Schumann, and Post-Carbon Institute, and then it sounds like you got into, is it direct investing yourself, or how did that turnabout come?
Yeah, so I was working for Michael Schumann for a while and doing research and interviews about local investing, and I was beginning to question whether I was fully living my values. I think I understood that there might be some money in my name, so I started a long process of figuring out what kind of money I had access to, and it took a while to get clarity around that. And then once I found out the kinds of investments that were in my name in the world, I just felt a strong sense of urgency around shifting those investments, because I had come through my work in local investing to understand how important where you put your money is. And so I was, like a little bit in this kind of shock phase when I found out that I had investments in mining companies and in kind of just big global multinational corporations who, like you read about and you organize against and all those things. And so I found out about like the holdings in my name probably like about 5 years ago. And from there, I got involved with resource generation, and through getting involved in resource generation, started organizing around investment specifically with this small collective, Regenerative Finance.
And so tell us more about Regenerative Finance, maybe the background and what you guys hope to do with the collective.
Sure. So about 3 years ago, we were all at a resource generation conference together, and resource generation organizes young people with wealth who are committed to social justice. And we all wanted to be doing work around investing. And I think something that was happening at that time for a lot of the folks that were getting involved were or I'll speak from my personal experience, I knew that there were some socially responsible investments, but those investments didn't authentically line up with my values. So I was committed to racial justice, economic justice, climate justice, and a lot of the options that were being presented to me around socially responsible investing didn't come close to my analysis on any of those issues. They were screened funds, or they were investments in renewable energy that weren't transferring power, but were just like new branches of old oil, like industries. And so we wanted to understand like if and how it would be possible to have investments that felt like very grounded in these values that we were holding. And so over the past 3 years, I think initially we were thinking about starting some kind of like anti-capitalist hedge fund or something like that. But after, beginning to do more research and build more connections, we formed some partnerships with movement networks that we're excited to work with to shift capital and to shift it on terms that we feel are authentically regenerative. So we're looking at non-extractive finance, putting in more value to the community than you're taking out. We're looking at shared risks. So how can you take an equal risk with the person you're investing in? And we're looking at 0% interest loans as a way of redistributing wealth rather than continuing to accumulate it. And so we're working with these principles and experimenting with what kind of co-developed terms of investment look like.
I think you're maybe the only person I saw, just for folks have a little bit of background, the SOCAP conference is social capital markets in San Francisco every year around September or October. And then the day before that is this great conference one day called CoCap, community capital. And Kate was on the panel with my business partner, Janie Casson, along with folks like Morgan Simon from Pi Investments and Dana Lanza from Confluence Philanthropy. And Kate was you said some really amazing things, and one of them was, why should investors get any return on investment? Why, it should be 0%. And I think most people in the room were like, wow, now that is cutting edge, to say 0%. Can you explain a little bit more about the 0% number just to folks who are maybe haven't heard this idea before?
Totally. So a lot of people in the impact investing space are pursuing market rate returns. So they want to continue, basically, they want investing to continue as it's happening now on the same terms, but they want magically for those same investments with the same terms to have a drastically different effect on the people and the communities and the environment. And I think that there are a lot of good projects, but something that I've noticed as a person with accumulated wealth is that in order for me to work towards creating the kind of world I want to live in, I'm going to need to redistribute my wealth. So what that means is I need to, over time, have less and less wealth, and I need to redistribute that wealth to people who that wealth has been extracted from. So one of the other things I think is like different about the approach of regenerative finance is we're thinking about accumulated wealth as something that needs to be stewarded and returned to the communities that it's been extracted from, rather than something that needs to be grown and continue, and helped along to continue to grow larger and larger. And I think that like 0%, of course, not many people are not in a position where they can make a 0% interest loan, although that is a very common form of lending, I think, among friends and families and communities. But what we're really pushing for is for people to, especially wealthy investors, to examine what they need and examine how the interest that they take on loans or in investments affects the communities that they're purporting to help through investing. So I don't know there's a lot of different things to say about that, but I think at heart, it's about building relationships and understanding accumulated wealth as a kind of as like an accumulated burden or an accumulated karma or an accumulated history, and looking, through kind of like looking through these mythologies we have around wealth accumulation into like what actually happened, like how was that wealth grown, like who was hurt in that process, and how can you repair the harm that wealth accumulation has caused.
I guess it's more of a philosophical question, but is there a karmically okay way to accumulate wealth, or is it just like, is it always like bad? I actually don't know.
I think that that's a great question that people are exploring in this next economy space. I think there are definitely ways of accumulating wealth where you're building power and building community and create. Yeah, I think so. I think my answer is yes. I think there are lots of karmically okay ways to accumulate wealth. And I think like in my specific context as a white person living in America, like with a white family, history, like if you look at the history of wealth accumulation in this country, it's really racialized, and I think like especially with Standing Rock, the protests happening at Standing Rock, with the indigenous folks there, it's like we are living in a real context where we're on this land that was stolen, hundreds of years ago, like violently colonized. We are like sitting, for me, like my trust fund, that's like coming out of, like a century in which white people were continuously accumulating wealth at the expense of people of color, like whether that's through slavery, whether that's through kind of unfair business practices, whether that's through access to capital when communities of color didn't have access to capital. There's so many things about wealth accumulation that are deeply tied to histories of racial injustice, especially in the United States, but also globally. And so like a lot of the folks and businesses that I invest in, I wish and I want and I hope for them and I root for them to accumulate wealth and to build businesses and build a regenerative economy. And I also encourage investors I work with to educate themselves and to explore the history of their wealth and connect it to the social justice movements that are happening today.
And when you talk to folks, say other high net worth young people, What are sort of the common themes for either wanting to or being or avoiding moving in this direction?
Yeah. I think that for many people that inherit wealth, they inherit a lot of stories about that wealth and a lot of responsibilities, and a lot of expectations. And so I think that people really struggle how to figure out being like a good son or a good daughter, or like living up to the expectations of their family, and balance that with their work or their values, especially if those values are changing or different or evolving from what their family values are around money. And so I think that another thing that happens is that when you think about reparations, or you think about trying to move towards repair in dealing with money that you've inherited, I think that that's really scary and hard and difficult, and especially as a white person in this country, like dealing with understanding and learning about like the trauma of racism can really be immobilizing. It can be really challenging. And I think that it's useful. So people, I think, have a tendency maybe to become overwhelmed and not take action, or to feel like any action they could take would be too small compared to the scope of the problem, or feel too much shame and guilt around it, and so just kind of compartmentalize it and not deal with it. So I think like a lot of the barriers are emotional, and are in figuring out how to kind of integrate different parts of your identity and different parts of your experience, and move into like taking action. So it's like people need to take small actions to get started, and sometimes that can feel scary in the face of the enormity of the problems that this country is facing.
Yeah, that really resonates. I mean, it definitely seems like just the physical act of moving your money to impact is less of the issue. It's more just like unpacking the emotional dynamics of the wealth. Like I imagine many of your peers in resource generation or regenerative finance, like the money maybe came from oil and gas or banking or something that it's are any of the folks that in regenerative finance or resource generation, is it self-made folks or is it mostly inherited?
Resource generation has like a, what's it called? Like maybe a working group or like a segment of the population that I think they call them earners, so people that have earned that money. And I think that where money is coming from and how it's earned like affects your relationship to it. So in regenerative finance, many of the people that we're working with are inheritors rather than folks that have earned a lot of money. But also I think that inheritors are often in a position where there's, like starting with much higher salaries because they had access to private school, or private schools or tutors or extracurriculars or Ivy League institutions. And so they're kind of on track to become high earners too.
So could you give us some examples of projects on the ground that regenerative finance is really proud of, or some of the, things that you're working on?
Yeah, sure. So 2 of our collective members just went to Mexico City to be a part of the co-design process of the Buen Vivir Fund, which is a fund that's being put together by an organization that used to be called IDEX in the Bay Area, but it's becoming Thousand Currents is their new name. And they're an organization that's been doing philanthropy, but kind of like radically different philanthropy for decades. And they work with groups in the global south kind of with a lens of decolonization. So they're looking at centering indigenous leaders and indigenous economies. And they have been working in a grant-making capacity, but a lot of the groups that they were supporting were asking for economic development. They were asking for investment. They kind of switched. They were like, okay, we're doing economic development. We're excited about receiving investment. Can we have some kind of investment fund? And so they co-convened a bunch of founding investors, of which regenerative finance is one, with the groups that are going to be kind of managing the lending in the global south and on the receiving end of these loans. And they were all together I mean, it's been like a months-long process, but they're all together in person in Mexico in the beginning of October to birth this global investment fund. And on one of the first days there, one of our collective members, Ari Sahagun, she was speaking about regenerative finance and spoke about how important it was to her that, especially when we're in this collaborative approach, that we're not extracting extra money out of these communities, that we're really in it with them and lending at 0%. And so I think that's probably going to be part of the fund. I don't know. I think they're still designing it, but so something that's so cool about that and that we're really proud of is that it's all about relationships. And Ari talks a lot about centering love in finance and figuring out how you bring that love and that warmth and real relationship, authentic relationship, into decisions around how money is going to be handled and what kind of contracts you're going to have and how funds are going to work. So we're really excited about the Buen Vivir Fund. And then we also had a pilot investment in the Renaissance Community Co-op, which is having its grand opening party this weekend. So that's really exciting. And the Renaissance Community Co-op is in Greensboro, North Carolina, in a majority Black working class neighborhood. They used to have a kind of chain grocery store there, but it was shut down, like I think 15 years ago, not because it wasn't profitable, because it wasn't profitable enough. And so it's been a community where there hasn't been access to a grocery store for like over 10 years. And they organized together. They organized to keep a dump out, to keep a jail out, and they organized to start a food co-op that they own together that is now open. And we're really excited about that investment because we are working with folks at Fund for Democratic Communities and this growing project, the Southern Reparations Loan Fund, which is a part of an even bigger financial collaborative. So it's this vision where communities can control capital and can decide themselves, rather than investors having the power, communities can have the power to decide where they want the capital to be. So the loan to RCC was like the Renaissance Community Co-op is a part of the beginning of building that community capacity to control capital. For the Southern Reparations Loan Fund, that's like in the Southeast, but it's a part of a national network.
That's really, yeah, there's a similar project in Oakland with People's Community Market.
Mm-hmm.
So it's funny, I think you already know about this, but for folks who didn't know, Lyft has a fund called the Force for Good Fund, and it's even we were trying to get like 2 to 4% return on investment, but now I'm almost feeling guilty about that being too high. I was like, we need to have 0% almost return. But,
no, I think that I think that it's important. Maybe more than like the number, what's important is that investors are in relationship with borrowers or with the institutions that are dispersing that money to authentically understand that like interest doesn't like automatically happen. It's not like, like if you leave money outside, like 2 to 4% will like grow on it. Like it's the interest is like money that is coming from borrowers like back into the institutions. And then, like a portion's coming off of the institutions that's going back to the investor. And so like with like RSF Prime, which is like when like RSF Social Finance will have these price setting meetings where they bring borrowers and investors together, or like with the Buen Vivir Fund, or like with the terms we co-developed with Renaissance Community Co-op. It's like this effort to have a transparent understanding of who needs the return, and like what kind of terms of investment are going to serve both the investor and the community or the business or the individual, like in an authentic way. And so I think that it's like for your fund, it's like if 2 to 4% is like what's going to work for everyone, like great, like, and I think for with regenerative finance, especially as we're working with wealthy individuals, like we're asking folks more and more, like, what do you need? What do you need from this capital? And what is the vision you have for your capital in the world? And how can the vision that you have, if your vision is, okay, I'm committed to racial justice and I want to invest in Black-owned businesses that are building community wealth, and building community control of capital. And then you're thinking about the interest that you want them to pay back to you, like just like having that conversation be something that it's not taken for granted that they're going to give you 5% interest back or kind of whatever is automatically expected. And instead you think about what you need and what they need.
Here's a hypothetical. Let's say if regenerative finance wanted to make an investment to a community based on reparations, maybe in the South, and instead of the co-op market, it was to build something maybe that you didn't think were like, oh, that's cool, but it's not really like what we had in, for example, it's like a church or something that and maybe you it's like you don't necessarily believe in religion and but it's what the community wants. Like, how do you deal with that dynamic with sort of the projects that you look to?
Totally. Like with Southern Reparations Loan Fund and with the emerging financial cooperative, the idea is that you're trying to invert the power relationship so that investors are not the ones who have the say about how the capital is used and that communities have the say. And so something that's so amazing about the Southern Reparations Loan Fund is it's not like it's the effort of like organizing and like movements and communities building power and building the power to make democratic decisions about capital. And I think that especially like in America now, rich people are told that they're very smart and that they have the answers. And oftentimes like privileged folks, like I'm a rich white person who went to Princeton. And so I've been told that I am smarter, than these communities, that I'm smarter than that I know better, that I could be able to tell them what would be the best thing for them. And that's just simply not true. And I really believe that communities have the capacity to make the best decisions for themselves because they know what they need. And so like long term with like the Southern Reparations Loan Fund, the goal would be to get enough investment that the capital can be controlled by the communities, that the communities are generating surplus, that the communities are deciding how to allocate, so that control can be I think that like control at a community level is what's going to allow people to be most successful. And Ed Whitfield at Fund for Democratic Communities talks a lot about reparations. And he talks about how it's not just that a check needs to be written to individuals, but it's that communities need to have their sovereignty and their like capacity to control. They need to be given back the capital that they need to self-determine kind of what their economies are going to look like, because that's like what's been stolen from Black people in America and from communities of color in America. It's like the decision-making power has been stolen over, the last few centuries. And so reparations, one vision of reparations is getting control back into those communities of capital so they have economic self-determination.
What organizations or investors, maybe foundations, do you admire that you think are really leading? In addition to regenerative finance, are there others that you look to say, wow, they're really creating this next economy, and that's something that other folks should look towards?
Yeah, there's a lot of amazing activists and organizers who are building the next economy. I just spoke with Melinda Weeks this morning, who's working on a fund called Beautiful Ventures, which is investing in racism solutions in the creative economy. And I think about like some of the folks I met at SOCAP this year who are doing really incredible organizing work are like Conda Mason at Impact Hub in Oakland, and Jessica Norwood, who works with Bali and is in Alabama doing a lot of community controlled investing work, and Rodney Foxworth in Baltimore is doing a lot with, I think his thing is invested impact. And I mean, in terms of like individual investors that I admire, I think that I am so inspired by my peers. So like other folks in regenerative finance or other young people who are making really different decisions than what's expected of them and are making, like shifting wealth in ways that are not traditional. And when I think about like how I want to build my portfolio, like I admire people that are transparent about their holdings and are shifting. I think that something that I struggle with finding models for are people who, especially around racial justice, people who have committed their portfolios, their investment portfolios, to racial justice. So I'm always looking for investors who are doing that, and haven't found that many folks that are embodying those values in the investments that they're making. But like with like the Southern Reparations Loan Fund, like Marnie Thompson, who like runs Fund for Democratic Communities, is like a real inspiration. And with the emerging financial cooperative that's kind of housed at Working World in New York City, so like Brendan Martin at Working World really inspires me, and the leaders of local, kind of these emerging local community controlled loan funds inspire me. Like Movement Generation, Gopal Dayaneni, who did like the workshop at a resource generation conference that really inspired us to get together and start Regenerative Finance, who worked with Margot Siegel, who's an investor that I really admire. So those are some of the folks who I'm inspired by.
I didn't hear Elon Musk. No, I'm just kidding.
Yeah, I mean, I think that they're cool. Yeah, I mean, something that's hard for me about like next economy, new economy stuff is that I really don't, how do I want to say this? So I really think that power needs to be transferred. And I think that there are a lot of kind of rich white people who are in leadership in the next economy space because they've had power in the old economy. So they have a lot of resources to redistribute. And I think that I'm grateful for those folks' work, and I want to continue to work with those folks. And I also think that like the leadership and the attention and the resources need to be transferred in order for us to create something that's new, and not just like the old economy and new clothes. And so I want to lift up and like bring attention to folks that weren't in leadership in the old economy and are in emerging leadership in the next economy.
What are some of the biggest blockages to your peers or other investors kind of moving towards this next economy investing style?
I mean, I think there's the emotional piece that we touched on earlier, where folks people are excited, and also like this economy has caused a lot of trauma, like really real, really deep trauma in Indigenous communities and communities of color, and in white people communities. Like a lot of this economy has been really traumatizing to folks. And I think that when people begin to look authentically at like the violence and the harm that is happening in the name of companies, in the name of investors, in the name of all of us, that creates a lot of feelings and a lot of like sadness and anger. And so I think that we really need to like find each other and like build supportive communities and like have hard conversations together and organize together so that people have the support that they need to take bold action, which is so needed. And I also think another barrier is that, I mean, especially for folks with inherited wealth who maybe have like inherited financial advisors as well, is that people with wealth are told that they should continue to grow that wealth and that they're entitled to grow that wealth and hold on to that wealth. And I think that we need to create more stories about different actions people can take and different ways people can move money, and or create, windows for people to do that with a slice of what they're investing. And so I think that like a big barrier is having financial professionals or having other folks that are willing to try really different things, doing different things.
Yeah, the hypothetical I had in my mind was like, say you had $100 million, but you had to spend it in a year. Like, because it does seem like most foundations or high net worth individuals, not the resource generation crowd or regenerative finance, but it's, spend the interest, but never touch the principal.
Yeah.
And like the hypothetical of like the planet is not doing well. Both in terms of social justice and climate change. So it's like that money needs to be applied very, very quickly. But yeah.
Totally. And foundations don't want to spend the principal. And it's like, for me, it feels very discouraging when people are hoarding wealth, or continuing to hoard and grow wealth because we live in, I don't know. I don't want to sound like a fatalist person, but I think that we need to move resources now as best as we are able. And so for me, like when you think about, like $100 million, you think about money, it's like we need to be moving those resources now, and we need to be moving it to frontline communities. So, I mean, like frontline is kind of a jargony word. We need to move resources to the communities that are most affected by economic injustices and racial injustices and climate injustices. And we need to give them resources because they're innovating, they're creating incredible innovative solutions. And if we could resource that work, there could be true deep shifts in how our economies are working. Like I think about, I'm so inspired by the work of Cooperation Jackson and Kali Akuno, and looking at what they're doing there, building grassroots power, building local land ownership, doing import replacement. There's just like such incredible work that can happen when communities have the power to self-determine kind of their priorities and to build power. And it's like, yeah, it's incredible. It's really incredible stuff. And so it's like, how do we get resources away? And also like, even like this question around like, what would you do with like $100 million? It's like, so often we're looking to the wrong people for the answer to that question. You know, we're looking to academics, and we're looking to, you know, like people who are kind of isolated from the problems that we're, you know, like theoretically trying to solve. So, yeah, I think transferring power is like something that is and will create big change in our economy.
What are some things that our listeners could do to support your work? Do you have any initiatives or events or ways that people could support regenerative finance?
Yeah, totally. So if you are an investor that's trying or looking for community or looking for support around making radically different decisions, like you can reach out to me personally. And I think that in terms of like folks that aren't investors, even sharing the story of regenerative finance or sharing different stories about what's possible. So challenging these narratives that investors are only going to come into projects with market rate returns, or they're only willing to invest in like tech startups from MBAs from Ivy League universities, you know, just like shifting how we're talking about what's possible for the next economy. And what else is helpful? Like something we're trying to do, and, you know, like we're struggling and learning about this all the time, but with regenerative finances, we're trying to figure out like what does investing that centers racial justice look like? What does investing that centers Indigenous sovereignty look like? And I'm always looking to learn more about those stories and connect with folks that have created different solutions to these really complex issues.
And where can folks go to learn more about your work?
We have a website, regenerativefinance.com, and I'm also a comics artist, and I make a lot of comics, which folks can check out at comicsbykate.com. And those comics kind of get into some of these thorny issues. And there's a bunch about Jewish economics and Buddhist economics too, which I think can be a fun way to learn about economics, which can feel hard and dry.
Yeah, I must say at CoCap, your presentation, that was like such a relief from like the traditional PowerPoint to have your presentation in comics.
Thank you.
It was very good.
Yeah, thanks.
Well, thank you so much, Kate. Just really want to appreciate you for coming on. And it's incredibly invigorating to learn that there are folks like you sort of placing capital, but also helping educate folks who have that accumulated wealth about like the opportunities that exist to fund next economy businesses or next economy organizations. So I just wanted to thank you for being on the show.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.